What's up, everyone? All right, so Arsh and I are hanging out, and today we're going to talk about fundamental analysis.
What's up, guys?
All right, so let's see. I've got my slides up. So today's topics: performing fundamental analysis on cryptocurrencies. This is not easy stuff, and actually, this is going to be a pretty short class because the reality is there's not a lot of fundamental analysis that you really can do on cryptocurrencies. I mean, there's some, and we'll talk about it, but it's pretty limited. It's not anywhere near the extent of what you can do when it comes to trading stocks. So we're going to talk about the role of supply, the role of demand, analyzing news events, and researching the white papers. All right, so Arch, do you want to get us started on talking about researching white papers?
Sure. So that's probably one of the best ways to get a comprehensive understanding of a specific current cryptocurrency, and that would be through reading the white paper, which is essentially a business plan that's created by the management team of that specific cryptocurrency. In the white paper, some of the things that are discussed include they talk more about the underlying technology, the use
Okay.
cases of the cryptocurrency, the target market, and it also provides more information about the management team that's running the show. So it's definitely important to have a good understanding of the specifics of your cryptocurrency by reading the white paper if you're really interested in trying to find the next big cryptocurrency. You want
Sure.
to read these white papers so you can develop your own opinion on how useful the cryptocurrency is in its application. And you can
Right.
usually find these white papers on the website of that cryptocurrency. So if you were interested in finding the Bitcoin white paper, you can go onto the official Bitcoin website and find it right on there.
Okay, right. So that makes sense. And, this is kind of as close as you can get to reading the annual filings that, listed companies' stocks, will prepare for their shareholders. And when we look at those annual filings, what we see are basically a report of the financials, which we're not going to see here, but we also see a report a little bit on the business plan, their competitive advantage, what they see as their risk factors, and that type of thing. But there isn't a system right now of standardizing how all of this looks. Whereas with stocks, every company that prepares an annual filing has to do it with the same template. Every company's accounting has to meet GAAP standard for a publicly traded company. So there's just a whole level of standardization, and that makes it easy for us as traders or as investors to compare apples to apples. And when it comes to cryptocurrencies, we just don't have that to the same extent. You can read the white paper, you can read the business plan, you can get a sense of their competitive advantage to a certain extent, but it's definitely going to be a little bit more limited there, which is a little bit of a challenge. So when we talk about performing fundamental analysis, this is, like I said, something that we can only do to a limited extent when it comes to cryptocurrencies. But fundamentals, and the ones that we're going to talk about today: supply, demand, and news events. Now, analyzing these really three components can help you determine if a cryptocurrency is fundamentally strong or weak. However, what they don't factor in are the emotions that are involved in this market. The market is absolutely driven by the emotions of traders. And so emotions of fear and greed have a huge impact on the way these trade. And so right now, we've obviously seen the emotions of the fear of missing out and the greed, the wanting to get this huge winner, bring in tons of buyers, where some of these cryptocurrencies have just gone, skyrocketing. But that's not because those moves are justified by fundamentals. Those moves are actually a result of the imbalance between supply and demand, but the demand is not caused by actual fundamental news. It's more caused by emotions. So one of the things that we say is that fundamental analysis is best applied in conjunction with technical analysis. You can't really separate the two. Although if you tried to, I would say that as a day trader, we can rely purely on technical analysis and completely ignore fundamentals almost like 99% of the time. There are a few times where fundamentals do become important, but it really is pretty rare. So when it comes, however, to fundamental analysis, you can't apply that in a bubble. Fundamentally, you may say this cryptocurrency is really strong because they've got a great business plan, they've got great technology, the supply is relatively low, which means if there is a lot of demand, the price will go up, and you'll say, I'm going to buy it without even looking at the price. But that obviously we know doesn't work, because cryptocurrencies like, Bitcoin have gone from 1,000 to 20,000 and then back down to 10,000. So all of that, if you said price is totally aside from the fundamentals, it's not, and it never will be. So we really have to apply them at the least side by side, or what's more likely for most of us is the focus will really be on the technical side of things. But Arch, do you want to talk a little bit about the role of supply, especially with Bitcoin having a maximum level of supply?
Yeah, so I'm sure most of our students are aware that the markets operate on supply and demand and the imbalance that's between the two. So most
Right.
cryptocurrencies are designed to have a maximum supply that's unlocked over time. As we've mentioned, Bitcoin has a supply of about 21 million once all of the Bitcoins have been mined, but currently that's around 17 million. So we still have another 4 million coins to mine. It's the limited supply and the scarcity that is one of the factors of price movement for Bitcoin.
Right.
It's also helpful to note that not all cryptocurrencies actually operate on a fixed supply, and some of those cryptocurrencies include Ethereum and Monero. These are unique because they're designed to have an uncapped supply, but there will be a diminishing and predictable inflation. So that means that the number of coins that are entering the network will gradually decrease over time, but it's never going to hit zero like Bitcoin will once all of the 21 million have been mined.
Right. And it's kind of interesting, because when we think about stocks, we think about them having a fixed level of supply, because when a company does its initial public offering, what they're doing is they're selling shares onto the market to raise money. So let's say a company does an IPO of 100 million shares. They sell them onto the market, and now there's 100 million shares available to buy and sell every single day. Well, 10 months later, a year later, they may decide that they need to raise more money. And so what they can do is a secondary offering. And there's nothing restricting them from doing that except board approval, essentially. I mean, if they want to do it and they feel they need to, they can. And then they do a secondary offering. They can sell another 100 million shares, and they could do it again and again and again. And they can keep doing it. What they're doing each time, of course, is diluting the value of the company. And existing shareholders certainly don't like having their shares diluted, but there's no restriction. With Bitcoin, there is a maximum supply. It's 21 million, and that will not change ever. So, that's something that is actually pretty unique. I know when I first learned about it, I was like, oh, wow, that's so for the rest of time, there's only going to be 21 million Bitcoins released. And so that's the cap. And now we have demand. So the price is really where that balance is between the level of supply and the level of demand. At what point, where's that line where someone says, I'm willing to pay this much, and someone says, I'm not going to sell for anything less than this? And where those two people meet, becomes the current price. Now, as we know with Bitcoin, the price has been fluctuating like crazy, from 1,000 up to 10,000 to 15,000 up to $20,000 for one coin, and then a 50% haircut back down to 10,000. So, certainly this makes it difficult as a long-term investment vehicle because there's so much volatility. But the fact that the supply is limited and that there's been really high demand is exactly what allows for for those types of really big moves. So when you're looking at potential cryptocurrencies that you might trade, you're looking through the headlines and the news and stuff like that. One of the things that you do want to think about is what's the current supply, because if the supply, like in the case of Ripple, is hundreds and hundreds of millions of coins, then what you're going to know is that in order for this to have a really big imbalance between supply and demand, and therefore to make a big move in price, it would take an almost unthinkable amount of demand, and it's not likely. So for instance, if you're on whatever, Yahoo Finance, or you're on your phone and you see some article about Microsoft, or you see some article about Google, odds are that one article isn't going to affect the price of the stock, because even though it might be a great article and people think, oh, I should buy some shares of Google, there's not going to be enough people to affect the price of the stock. However, when you see a headline on a small little biotech company that only released 10 million shares during their IPO, so very small level of supply, And that news is that they just came out with great clinical trials from this new drug they've been working on for the last 5 years. Well, geez, that could be something that could allow that company, that stock, to go up 100, 200, 300% in a single day. And we've seen it 1,000 times.
Right.
I mean, again and again and again, we see it. And it's not that much different from what we see in the crypto space. Again, emotions, the combination of news and emotions are really what create that move. But the supply role is a really important part of it. So do you want to talk a little bit about the role of demand in this equation?
Yeah, so that's the other piece of the puzzle with supply, and it's probably one of the major influencers of price.
Right.
Demand is usually influenced by, for Bitcoin specifically, it's influenced by transactional volume, user adoption, and trading activity. So these are some of the factors that stir up the demand within Bitcoin and some of these other cryptocurrencies. So transactional volume is going to be the total number of transactions that take place over the network. We saw a few months ago when Bitcoin had peaked around 20,000, the transactional volume actually peaked right around the same time. So
Right.
keeping an eye on the transactional volume and what that's doing can kind of give you an idea of how much activity the network is seeing. So once we start seeing the transactional volume pick up, it's going to be pretty likely that the price is probably going to start increasing as well. So another piece of demand, another factor that influenced demand is the user adoption. Mm-hmm. So as more people begin to adopt the cryptocurrency, that's ultimately just going to drive more demand into the market, since more people are going to be using that cryptocurrency. And finally, trading activity is probably one of the most influential pieces of demand, because that's where the speculation, the emotion, and news can actually cause major shifts in demand. We've seen that supply and demand are constantly shifting. So this is one of the reasons why the market can kind of seem so random at times.
Mm-hmm. Yeah, and so one of the things that's interesting here, especially with user adoption, is we were seeing, especially in the end of 2017, lots of headlines coming out about, oh, this company's going to start accepting Bitcoin. You know, like, oh, Target's going to start accepting Bitcoin in the checkout lane, stuff like that. And, so that would create this speculation that, oh, this is going to be widespread adoption. More people are going to use it. People are going to be using this every day and a year from now. But the other side of it, which doesn't really add up, is the fact that, the money I have in my wallet, whatever, $20, I don't have to worry about overnight that losing 50% of its value, or that tomorrow that $20 is actually going to be worth $40 because it goes up. And that's what happens with these cryptocurrencies, is that in contrast to an actual currency, which is stable, the value is very volatile. And so that's why, these headlines about increase in adoption and things like that, they're interesting, but in order for that to actually happen, we're going to need to see a real sort of equilibrium point where the price isn't so volatile anymore, because it's just simply not going to be a valid currency while the price is so volatile. But in any case, transaction volume and trading activity also definitely two really good signs of demand. So, what the next question is, what causes demand? These are maybe indicators of demand: volume, trading activity, user adoption. And news is what creates demand, at least initially. Now, even back in July of 2017, the news, Bitcoin rallies 29% after Bitcoin scaling debate settled. So, things like that, that's a headline. A 29% move is massive. And then when you have those types of headlines out there that, this cryptocurrency is up 29% in the last, day or 3 days or whatever it is, then people see that, and that's when the emotions start to kick in, because people think, oh my God, I'm missing this opportunity. I got to jump in. And that's when they go in and they start pressing the buy button. They get themselves linked up to their Coinbase, and next thing you know, your aunt and your uncle are buying cryptocurrency, talking about the dinner table, because everyone's just so excited. I want to be part of this. I don't want to miss out. So fear of missing out, the greed, that's what starts to bring more people in. And then, of course, you have more headlines. And the headline might simply be, Bitcoin is up 50% in the last 3 months. Now, the funny thing about that headline is that it's not fundamental news in that case. It's it's just reporting the current market, but that can be enough to get people more excited who weren't already on board. Now, Arsh, you could probably walk us through a couple of these specific headlines and talk about how they influenced the price of Bitcoin specifically.
Yeah, definitely. We'll get a little bit more into those on the next slide. But to add a little bit to what you were mentioning on this slide, it's definitely really important to have a good understanding of how these news events can introduce volatility into the market and how the market reacts to these catalysts, because they really tend to stir up some activity in the markets when you see these major headlines come out. So we've seen that these news events tend to lead to some significant moves, and they kind of provide really important insight into what might happen next with the prices.
Yeah.
So one of the things that's helped me most in my fundamental analysis is determining how the market reacts to a piece of news.
Right.
It's really important to understand that, because a strong market will shrug off bad news and it's going to propel higher on the good news, whereas a weak market is going to shrug off the good news and then propel lower on the bad news.
Right.
So when you see a piece of news that is supposed to be really bad for the markets,
like
such as
when
when China decided to ban ICOs from taking place,
yeah.
that was a big fear piece that came out. And it doesn't have an effect on the markets, that's a pretty important sign that the market was willing to shrug off the bad news and that it's probably going to move higher in the short term.
Right. Yeah.
So
that's
on the other,
there's no question about it. I mean, that's absolutely true. Calling it a fraud and then it bounces up, that's a really good sign of strength.
Right. And then on the other hand, if we had some really great news come out from the government that they're going to start adopting Bitcoin and it doesn't have any effect on the prices, that's probably a really bearish sign, and that's telling you that the market is shrugging off what's supposed to be really good news, and maybe prices are probably going to start heading lower. So we'll look at more of these examples and how they affected the chart itself in the next slide.
And I'll show you that slide. So the challenge is when a headline first comes out, it can be hard to interpret it, because initially, if you're the very first person to see a headline and you read it, you might just think, okay, well, Bitcoin, this person says Bitcoin's a fraud. So you're like, okay, that's got to be bad news, right? But then if you wait and you see, people are actually buying it and it's going up, then it's like, wait a second, I'm having a hard time understanding the disconnect between, this headline that I see and what the price is doing. So that's where, again, fundamental analysis, the fundamentals of someone saying that are bad, right? But then the price reaction, the technicals go the other way. So again, we have to rely on technicals at the end of the day.
Yep, that's definitely a great point. So if we look at how these catalysts actually affected the chart, the first piece of news that we mentioned was the scaling debate that came out on 7/20. So when the market realized that news, they started quickly buying up coins in anticipation of prices surging higher. And we saw that after that piece of news came out, we consolidated for a few days before actually another piece of news came out, which was the successful split of Bitcoin and Bitcoin Cash. And you can just see what that piece of news did for prices. We really didn't look back from there for a couple of months practically. Eventually we did come back down, and it took a really scary call from Jamie Dimon, who's the CEO of the world's biggest bank. He said that Bitcoin was a fraud, and that kind of caused prices to dip. But if you look at the chart, it's just crazy, because that same day we saw the highest buy-side volume on Bitcoin that it had ever seen. So that kind of gave you an idea that the market was really willing to shrug off that news, and of course, we didn't look back from that day. So it's really important that you kind of incorporate an understanding of how these news events play out in the market.
Yeah. So, basically, to recap for you guys, like we said, the fundamentals of any cryptocurrency, Bitcoin or any other, it's going to be pretty limited, because there's not a lot of digging that you can do into the financials, all that stuff. You're not going to be able to read quarterly earnings. They're not standardized. They're not all going to look the same. So ultimately, what we really rely on are technicals. That's what we focus on. And so that's going to be really the bulk of this class are talking about the technicals. Having said that, it's important for you to look at fundamental analysis in terms of being aware of the headlines and when you see a headline that's interesting, take note of it and look at how the price reacts. In these cases where you have bad news and the price goes up, I mean, that's certainly bullish, but it's going to be difficult to trade based on that in terms of day trades. I mean, you could maybe take longer term investments, but again, those are more speculative. And so really what we're going to do for the majority of our trades is focus on technical analysis. So what we're going to do is cut this class here and jump into chapter 4 on technical analysis. All right, so we will see you there.
Thanks, guys. See ya.